for me, not much has changed over the last year. We've lived in an environment where the expectation was that interest rates would be up. You've got higher inflation on the horizon. You've got major changes going on in the U.S. fiscal policy in terms of the tax cuts. You've got major changes in our trading policy, what with all of the the tariffs we're putting on the Chinese and others. So I think all of that backdrop is finally catching up to the market. And I look at this as, one of these things where we as investors have a call to make. The economy is still strong, but there are an awful lot of signals out there that suggest that equity prices are going to suffer relative to more conservative things like T-bills. I am personally still very conservatively postured. I got there too early. It feels better this week than it did last month. But, we've only come down to August levels? I mean, the market's been going up really hard. So I look at this and say, some of these stocks are going to be giving us buying opportunities somewhere in here, but candidly, that is not where I'm looking. I'm still in a defensive posture because of what's going on with the election.
I wonder, though, about ancillary impacts. We got an IPO over here that's down 3% today. It's a different story than we were seeing from the past couple of IPOs with this volatility that we've seen over the past couple of days. I wonder about impacts on companies trying to come to market.
I think it's definitely going to be an issue. And, it always is. And it's kind of weird because, John, I think we've talked about this before. Historically, the companies that go public in tough markets, those are usually the ones that over the long haul perform best. They come at a reasonable price. The buyers do very, very well. They wind up holding the stock for a long period of time. And so in my mind, if I'm the CEO or the investors in a company that's ready to go public, I would not let this correction keep me from going public, because at the end of the day, strategically, you're going to be better off to get the transaction done, even if it doesn't quite meet your short-term pricing guides.
Roger, you just said something that caught my attention. You said you're defensively postured coming into the election. Where do you think we go in terms of election outcomes, and what do you think that means for equities through the end of the year?
It's a really great question. I don't honestly know the answer. I'm just saying I think there's a lot of uncertainty in the marketplace right now, and I'm not personally comfortable being heavily long stocks with all this uncertainty out there. The election is the next big milestone. And
so
quite
are you
obviously,
in bonds?
No, I'm in T-bills. And, I don't want to own anything long because rates are going up. So I own things very, very short. And, Carl's been teasing me correctly because I got there, a year ago.
You were way early.
And but again, Carl, one of the points that I made to you is, I'm at an age where I don't want to have to try to earn it all back, right? And so I made a choice for me, and I was very open about that and tried to say to everybody who's watching, these are very personal calls. We all have different risk profiles, and we should invest accordingly. And for me right now, this is a time to be defensive.
But Roger, I mean, two things. One is that midterm years or years following a midterm are historically bullish. The other is, what about the midterm makes you cautious on the outcome? Is it about somehow the control on government purse strings, or us getting, mired in some impeachment hearings? What specifically worries you?
Well, Carl, think about it this way, right? What are the stocks that I own? I own tech stocks. Now, what is it about the midterms I would be worried about? Well, I'm really worried about what if there's a lot of interference using Facebook, using Twitter, using YouTube, using Instagram. What is that going to do to my sector? What is the government going to do if it turns out that these platforms are still vulnerable? And I think they are still vulnerable. What we don't know is whether it'll affect the outcome this time. But, they are vulnerable. And in my mind, the companies have left us with no choice but to trust them. And if that doesn't go well, I think that's going to be terrible for the stocks. And so I'm cautious.
Roger, I want to mention major indices coming off their lows a bit. The Dow now down about 1%, 265 points. It was down well over 300 points. I want to ask about the fundamentals here. And fundamentally, you said you own tech stocks. What's going to make the difference for them moving forward despite all this volatility? Is it access to global markets? Is it access specifically to huge markets like China and getting that figured out, or something else?
Yeah, John, I think it's a real huge policy question for our government. Exactly what we're going to allow and what we're going to restrict with respect to China right now. It seems obvious that we don't want American companies doing joint artificial intelligence projects in China. It seems obvious that the Chinese have concerns about other things we're doing. So I'm really nervous about what that does. To my mind, the most important thing for tech right now is that we find a way to create space for startups to do whatever the next big thing is. We've talked before about 5G and what the Internet of Things could be. The problem that we have in that right now is that the market leaders, specifically Google, Amazon, and now Facebook, they have really powerful positions in the Internet of Things. And as a consequence, I'm concerned that we're not going to see the level of startup activity, the level of innovation that you would get with a more diverse economy. And so as I look at things going forward, I think the big stocks are really well positioned because in the absence of regulation, they get to do whatever they want. I don't think that's good for the economy, but I do think that'll be good for those stocks, assuming we don't have more problems on trade, assuming inflation doesn't go up too much, assuming that interest rates don't go up too much. And I'm not sure any of those assumptions are ones we can be comfortable about at this point.